erbij kan snijden?
Ja, dat
Kan
kan
ook.
zijn.
Ja, dat kan. Ja, dat kan.
Nee, transcriptie hoeft niet, maar goed. Alright. Wie wil dan de presentatie delen?
Ik kan het scherm wel delen.
Oepie.
Zeker, 1 seconde. Presentatie. Oh, ik mag geen scherm delen. Alleen maar de host kan dat. Tenzij ik toestemming krijg van jullie.
Doe dat.
Geen idee. Of degene die de call gestart heeft, moet gewoon even het scherm delen. Oh, ja.
Ja, ik heb nu iedereen een presentatie van gemaakt.
Even kijken. Deze. Oh. Ik doe het niet altijd even netjes. Zo. Ja, werkt het?
Ja, ik kan hem zien.
Mooi, ik ook.
Helemaal super. Ja, is iedereen klaar? Want ik moet beginnen, zeg maar.
Ik ben er klaar voor. Eens kijken, ik doe technologie en conclusie. Ja.
Ja, de rest ook klaar?
Ja, ik ben ook klaar.
Right, top. Nou, dan ga ik beginnen. Okay, welcome everyone to our future-proof portfolio. My name is Floris van Duin, and I will present this future-proof portfolio together with Koen de Bruin, Bastiaan van der Bent, and Robin Koenders. So first we're going to the introduction. Yes, thank you. In the introduction, well, first off, we will discuss our asset distribution. After that, we will look at the investment strategy that we will put into this future-proof portfolio. Then we will discuss the bonds that we will invest in, the commodities, the indexes, the stocks. After that is the crypto, and then we have a short conclusion for you. So now to the asset allocation. So we've decided to invest in the following assets. So first off, there's bonds. In bonds, we would like to invest 5% of our asset allocation. In commodities, we would like to invest 10%. In ETF and indexes, 15%. In stocks, 45%, and in crypto, 25%. So now we're going to the investment strategy.
So there are many different investment strategies. The most common are value investing, growth investing, income investing, and daily cost averaging. Well, personally, we believe that daily cost averaging is the best strategy for our portfolio. With daily cost averaging, the investor invests a fixed amount of money at regular intervals, no matter the price. So throughout time, this strategy has proven to reduce the overall risk of investing. This is because when the price is low, you buy more shares, and when the price is high, you buy fewer shares. And overall, this will reduce the average cost of your investments. So for our portfolio, we would advise to spread out the daily cost averaging over 1 year and invest the same amount of money each week for 1 year.
All right. So now we are going to look at bonds and what we're going to invest in them. So bonds are, of course, very important, like every portfolio needs them. They can also be used well in combination with the dollar cost average method because they pay out the interest that is linked to the bonds itself. So we've chosen two bonds to invest in. The first one is the iShares interest rate hedge high risk yield bond. This is high yield bond, so that means that there's a bit more risk than, of course, a government-backed bond. The expected return for this are in a 5-year period is 3.23%, and they have an expense ratio of 0.52, and the total TTM yield is set at 5.47%. The second bond is the iShares 0 to 5-year TIPS bond. This is an inflation corrected bond, so it's backed by the US government. So it will save us a bit of money on inflation that it will happen over the coming years. The expected return is set at 2.79%. The TTM yield is 6.33%, and the expense ratio is really low. It's at 0.03%. So that is why it is a good investment. And now we will move on.
So the first commodity that we would advise to invest in is silver. Well, silver has been a store of value and medium of exchange for thousands of years. And the use of silver coins dates back all the way to the Romans. Well, silver has many unique properties, such as its high electric conductivity, thermal conductivity, and reflectivity. Well, silver is used for many industrial applications, such as electronics, photography, solar energy, medicine, water purification, manufacturing, batteries, and as an investment metal. Well, in the last few years, there's been quite a concern for a silver shortage. This is because there has been an increasingly demand in the physical supply of silver, especially in the energy and the tech, in the energy and tech sectors. And because of this, a lot of people, and especially big companies, have been asking for the physical delivery of their silver futures at exchanges like the COMEX and the LBMA. And because of this, the silver supply of the LBMA and the COMEX have been increasing day over day, as can be seen in the two pictures in this presentation. And well, in conclusion, silver's unique properties make it ideal for renewable energy technology. And this is something that's become quite popular the last few years. And yeah, this will increase the future price of silver. So the second commodity that we advise to invest in is gold. Gold has been valued throughout history for its many unique purposes. It has been used as a form of currency, a store of value, and a hedge against inflation for thousands of years. So there are multiple reasons why to invest in gold. So the first one, the price of gold is not correlated to the price of stocks and bonds, which makes it great for portfolio diversification. It has also been seen as a store of wealth for thousands of years. It offers protections against the devaluation of fiat currency. In times of political and economic uncertainty, gold can be seen as a safe haven asset. And gold also has a limited supply. And this makes it great because when you compare it to the euro and the dollar, it can be printed as much as the government wants. So when investing in commodities, you have the choice to invest in the physical commodities or in derivatives. Well, personally, we believe that it's better to invest in the physical commodities for several reasons. So the first one is when you have physical commodities, you have control over the asset. Well, it also has reduced counterparty risk, and it's just way easier to order because you can just order gold and silver online, just like you order something from Amazon. But when you look at derivatives, the control over the assets, they are at the counterparty. And this also brings the question if the assets and the derivatives are fully backed by the physical assets. And because of this, we believe that it's better to invest in physical silver and gold than invest in derivatives of silver and gold.
Okay, the indexes. Well, an index fund is a mutual fund of a portfolio constructed to match or track the components of the financial market index. An index fund provides with low turnover, low portfolio turnover, low operating expenses, and broad market exposure. An index fund is considered a passive investment strategy. This is because the fund's performance will track the performance of the underlying index and will not try to beat it. Index funds are also a great way to diversify your portfolio. In the project, we followed 4 major index funds. The first one is S&P 500. S&P 500 follows 500 of the largest corporations in America. The S&P 500 is constructed out of 27% in the IT sector, 15% in healthcare sector, and 12% in the financial sector. Over the last 5 years, it had an uptrend of 47%. Second is the Nasdaq. This has a component of 51% technology sector, 21% consumer, and 12% healthcare. The IX has 21% consumer staples, 22% technology, and 15% energy, and had an uptrend of 36% over the last 5 years. And the last one has a 45% technology sector, 22% consumer discretionary sector, and 12% industrial sector, and had an uptrend of 57%. So the next is the SUX is fintech. Fintech is a financial technology. It's used to improve and automate the financial services. Fintech companies use technology to improve the efficiency and accessibility for these financial services. The fintech sector is growing at a rapid rate. In 2018, it had a global market investment of 111 billion, and in 2022, it grew to 210 billion. The compound rate of annually is 19.8% from 2022 to 2028. Some major fintech companies are PayPal and Coinbase. PayPal has a high EPS and high PE ratio, and this is great for investments. Coinbase has a normal PB ratio and has shown signs of growth this year. So that's why we also chose this company. The consumer staples sector, this is the sector of companies that produce goods that are used in everyday living. It is considered a defensive investment since it doesn't follow the economic downtrend, since these companies produce goods that are needed for everyday living. These companies have shown strong and consistent revenue streams since these products are always needed. Some major companies are Procter & Gamble. This has a normal PE ratio, high PB ratio, and has a return on equity of almost 32%. Walmart is another major one, has a high PE ratio, a normal PB ratio, and a return on equity of almost 12%. And Costco has a high PE ratio, high PB ratio, and it has a return on equity of almost 30%.
Right. Then I'd like to move on to the technology sector. As we all know, the technology sector has slowly been outpacing the S&P 500 since roughly the 2008 crisis. This is most likely due to rapid technological advancement since then. But because of this slow and slight deviation, I wouldn't say this is a bubble. It seems to be just an increase of growth compared to the S&P 500 due to technological advancement. So let's start with the elephant in the room, the tech giants. There are 3 major tech giants: Apple, Microsoft, and Google. All of them have been performing relatively well, but out of those 3, I would have to say that Apple and Microsoft have the best potential for investment, given Google's lower margins overall. Then there's also the electric vehicles market. Electric vehicles are all the hype right now. There's been a steady growth of electric cars ever since the first Tesla released back in 2008. And in recent years, even more car manufacturers have been joining this arms race of who can make the best electric car. There's also been a recent boom of personal light electric vehicles. Think of those little scooters you see in Paris or in Rome or wherever you are. The little flex scooters, like the actual mopeds you see in the Netherlands, and all those kinds of like personal light vehicles. All these vehicles need certain components. So there are 3 related segments: battery technology, microchip fabrication, and a fairly unknown one, which is the FPGA market. So let's start with battery technology. Battery technology, I have selected 5 unique companies within this sector: Albemarle Corporation, Lithium Americas Corporation, FREYR Battery, Microvast Holdings, and Solid Power Incorporated. Albemarle Corporation is a chemicals company at heart who specialize in lithium, beryllium, and catalysts. No, it is bromine, not beryllium, sorry. Lithium, bromine, and catalysts. Lithium Americas Corporation is a mining corporation both active in North America as well as Argentina and the rest of South America. FREYR Batteries makes car batteries and boat batteries, mainly for like large cargo ships, and Microvast Holdings and Solid Power make steady state batteries. Long story short, Microvast Holdings and Solid Power Incorporated are on a massive downtrend, losing about 80% of their value since IPO. Lithium Americas is a mining company. Mining companies are not all too hot right now because of renewable energy. So FREYR Battery and Albemarle Corporation are probably the best investment strategies here. Onto microchip fabrication, where we have ASML, who obviously provides the machines to provide microchips. Very important when you're talking about a rise in electronic vehicles, so therefore electronic products. Lam Research Corporation is basically the poor man's ASML. The people who cannot afford or are not on the list to buy a machine from ASML will have to buy from Lam. ASML and Lam basically have a duopoly, so investing in both of these is a very solid strategy. And then finally, I'd like to mention Texas Instruments and Taiwan Semiconductor. Texas Instruments makes basically every single chip on the planet with an inventory of 80,000 unique products. And Taiwan Semiconductor is one of the largest chip manufacturers in the world using machines from ASML. Then the FPGA segment, which is covered by Intel Corporation, Advanced Micro Devices Inc. or AMD, Lattice Semiconductor Corporation, and Microchip. Unfortunately, Intel and AMD are not exclusively FPGA manufacturers, which is why I would like to exclude them from this section when it comes to investing in them, because you would be diluting your investment with other ventures by Intel and AMD. So when investing in FPGA, you'd like to invest in FPGA alone, which is why the only 2 companies left within this space with any significant market share are Lattice Semiconductor and Microchip Technology Incorporated.
All right, now we're going to look at the crypto and the DeFi world, and especially we're going to look at Uniswap. Well, Uniswap is a platform where users can exchange and trade different crypto coins. One of the challenges that Uniswap has to deal with is that it has to have enough liquidity in order to facilitate the trades for the traders. And they have fixed this problem by enabling liquidity pools. So people can stake their liquidity in order to help the platform. Because of this, the gas fees for Uniswap are relatively low, which is good for investors and good for this portfolio, because we would like to invest in the coin that is linked to Uniswap, so the UNX coin. The platform is, of course, really decentralized. It goes by all the rules of DeFi, so that's really interesting. It has a lot of room to grow. In the beginning, in 2018, when the coin was launched, no one really used it because Bitcoin was more familiar. Other coins were, so they were a bit hesitant traders. In 2020, more traders started to use it, and it became more interesting. And that is also why the volume increased from 1 million to around 1 billion. So that's a huge increase. That also means that it has even more room to grow in the future. Another good thing about it is its market capitalization. Uniswap is one of the biggest DeFi platforms in the world. The market capitalization is estimated to be around $8.3 billion US. And that is compared to the competitors like the biggest in the whole world. So that's really good for investors. The last thing that is also interesting for investing in the coin is that it has a finite supply. So as of right now, there are around 750 million Uniswap coins in circulation, but there are only 250 million more that are coming to the market. So eventually, this of course means that the supply has run out and that the price will increase. The predictions of the coin are in the next slide. Well, there's a graph where you can see the prediction of the coin in the future, and there's a table. They expect it to grow from like $25 to $32, which is right now, to around 41 at the minimum. At the maximum, it will go to around $60. So yeah, that is also a good indication that it's a good investment. Then we will move on to Synthetix. Synthetix is a really interesting decentralized finance platform. On this platform, the users can issue smart contracts in order to track commodities. So think of gold, for example. If you want to track it and not have the annoyance of keeping gold somewhere in your house or having the platform keep the gold for you, you can do this through Synthetix. Because it just tracks the commodities and not actually has to hold them somewhere, the cost of the platform is lower. With gold as an example, you don't have to keep the gold in a safe or guard it, and then you have to pay the people that have to do all these things. So that saves a lot of money. This means that the fees are also lower. So yeah, that's really good. The platform also offers more access. A lot of people did not have access to the normal commodities market, and because crypto and DeFi is mostly, yeah, it's completely online, everyone can access from all over the world if you have an internet connection. This is of course decentralized, not completely as of now, but they are really looking into it. They already have set up a voting system which is linked to their coins. So the more coins you have, the more voting rights you have, and therefore more interest in the platform itself. Then there is the issue of the collateralization. Synthetix is really focused on their collateralization in order to keep their platform safe and secure from like big price changes in the commodities market. So they have a 750% collateralization rule that is in place at all time. The last one, which they did, which is also really interesting, is they added inflation. First, this didn't sound logical to me, but they added inflation into the system, and in the hope that this will incentivize the users to provide more and more liquidity to the platform and to help it grow. So this means that more people will stake their coins and the liquidity will grow for the whole platform, which of course is very good. There's also some price predictions. Yeah, so as you can see in the graph, it looks very interesting for investors. As of right now, we're below the $10, around the $5 mark for the coin. And if we're looking at the future, it will only increase. And yeah, it's looking very interesting for investing. And that's why we included this in the portfolio. Now we will go to blockchain scaling.
So due to the rising demand of blockchain-based services and applications, there has been put a lot of pressure on blockchain networks to scale. So if they don't scale, they will struggle to keep up with the high user rate and increased volume of transactions and data. And this will eventually lead to high fees, disruptions, and delays, which is obviously not good for the user experience. Well, Polygon can solve these issues, because Polygon is a decentralized platform that offers the infrastructure for developing and executing dApps on the Ethereum blockchain. Well, by utilizing layer 2 scaling technologies, it aims to enhance the speed of transactions and reduce the costs of transactions. Well, they try to do this with a technology called sidechains. The idea behind it is that they will process the transactions on a separate layer outside of the Ethereum blockchain. Well, Polygon is well suited to capitalize on the increasingly demand of dApps and blockchain technology. This is because Polygon is developer-centric. It has a lot of layer 2 scaling solutions. It has really big partnerships with companies like Meta, Adidas, and Stripe, I believe. And because of this, Polygon is a good investment option for if you want to invest in the blockchain, in the blockchain sphere. Well, we also have NFTs. NFT stands for a non-fungible token. It's basically a unique digital asset that represents the ownership of a specific piece of content. Well, non-fungible means that's one of a kind, so there's just one of it in the entire world, just like the Mona Lisa, for example. And a lot of people think when you hear the word NFT immediately to digital art, but NFTs can be used for a lot more than that, because NFTs can also be used for real estate, music, fractional ownership, intellectual property, and the tokenization of assets. Well, NFTs have a revolutionary technology that has the potential to change the way we think about ownership in the digital world. And with the growing demand and increasingly more uses for NFTs, it's becoming an important part of an investor's portfolio. Well, in order to capitalize the growth of NFTs, we would recommend to invest in an NFT marketplace. This is Loopshare. Loopshare is an Ethereum-based community-first marketplace. So an NFT marketplace is a place where users can buy and sell NFTs. Well, Loopshare tries to distinct itself from its competitors with a different approach to the NFT trading and the culture behind it. Well, the platform itself is a really user-friendly design, and but at the same time, it also looks professional. And Loopshare has lower fees than its competitors. It has a flat fee of 2%, while the competitors like OpenSea has a flat fee of around 3%. So investing in an NFT market is a great opportunity to capitalize on the more and more popular, it's a great way to capitalize the growth in NFTs. So the last cryptocurrency we would advise to invest in is Bitcoin. Bitcoin is a peer-to-peer electronic cash system that allows direct transactions between people without the need of any central authority. Well, it was created in 2009 by an anonymous group or person called Satoshi Nakamoto. And the transactions of Bitcoin are recorded in a public ledger called the blockchain. And this offers the transactions transparency and security. Well, there are multiple reasons why to invest in Bitcoin. Well, the first one is it has a potential of really high returns. So in 2023, it has been the best performing asset and has made a return of around 40% already. But it's also decentralized. So Bitcoin, the network itself is not owned by any centralized authority or a government. Well, Bitcoin can be a great hedge against inflation. This is because it's not tied to any fiat currency and its supply is limited at 21 million coins. So it cannot be printed more and more just like fiat currencies. Bitcoin also offers fast, secure, and borderless transactions. And Bitcoin is the first decentralized digital currency, and because of this, a lot of people believe in Bitcoin and its underlying blockchain technology.
So now on to the conclusion. To summarize this entire presentation, we have put a sizable safety net in place using bonds and commodities, allocating about, I believe it's 15 or 20% into those asset classes. We've got a wide spread using ETFs, where ETF itself covers a fairly large amount of stocks and sectors. Beyond that, we have a diverse stock portfolio across 3 different sectors, the financial technology sector, the consumer staples sector, and the technology sector. And finally, we have taken the leap into crypto investing by dedicating a sizable percentage into the crypto market space. Thank you for coming to our presentation. Nou, dat was hem dan.